And welcome to Smaulgld's In Case You Missed It, top gold and silver stories from the week ended June 18th, 2016. Now you can always take a look at this blog post if you go to smaulgld.com and look for the blog post entitled In Case You Missed It, week ended June 18th, 2016. So let's talk about what happened last week in case you missed some of the top gold and silver stories. Well, first of all, it was an eventful week. We had the terrorist attack in Orlando. The Federal Reserve came out with their decision not to raise rates in June. Not much of a surprise there. And we had the assassination of a British member of Parliament just as we come up to that Brexit vote next week. Let's first take a look at the gold and silver prices. Gold closed last week about 1273 and it closed up almost to 1300. It had been over 1300 on Thursday, but it closed on Friday at 1298. Silver also rose from 1728 last week to up about 1750. 1747 was the close on Friday. The gold silver ratio is now at 74:31 to 1, which places it just about where it was last year at this time, although earlier in the year it had peaked up around 84 to 1. Chart of the week. You can see the gold versus British pounds chart. And you can see that gold is now trading at close to 920 British pounds per ounce. And that's up from about 720 just a year ago. And that's all due to the concern over the potential Brexit vote next week. And here are the stories that we covered or followed or commented on or wrote last week. We mentioned the terrorist attack in Orlando. That happened at the very top of the week. There was a de-dollarization story about China opening up its yuan trade systems in branches in London and New York. That's just a continuation of China pushing the yuan internationally as a currency that could be used as an alternative to the US dollar. On June 13th, we released a blog post on what we call the dark side of minimum wage laws. And between our subscribers, very few people took a look at that blog post. I was kind of disappointed, but it got picked up in the Economic Policy Journal. And that blog post deals with one of the unintended consequences of minimum wage laws, which is that companies start using technology and waste their tech resources trying to eliminate workers just to comply or to make sure that they can stay in business or profitable when you have minimum wage laws. If you're interested in economics, it's a good read. If you're not, then you can ignore it, as most of our subscribers did last week. Gold stories. We're continuing to see these stories about fake gold and beware of counterfeits because they're flooding the market. I think NBC News was the one who ran this story. We saw a similar story last week. I'm not sure that there's any more or any less or any fewer gold or silver coins in the market. It's just that it seems to me a way of keeping people away from gold and silver and putting your money in the quote safe bank or a stock market, or if you have to buy gold, buy the EFTs, buy the exchange traded funds, but don't dare test the waters and buy something that might be fake. We see that from time to time. The latest Brexit poll as of June 13th showed the Leave people up 6%. U.S. Mint sales update. The U.S. Mint sales have slowed down in June, finally, after selling 4 million silver eagles a month. From January, February, March, April, and May, the sales have slowed down, and as you can see, we track it daily. I think it was about 81,000 on that day, and right now the U.S. Mint is at about 1 million halfway through the month. So it looks like this month, June, may be a month where there's only about 2 million sold as compared to over 4 million sold every month since the beginning of the year. We'll get into that, why that is, later on in the podcast. June 14th, economic data. We saw an increase in retail sales, but most of that increase was due to increased gas spending, so it doesn't mean that consumers are going out and spending their high earnings and wages and buying things. They're just spending more money on gas. There is some good, interesting gold stories. Egypt, looking at its ancient history to find new gold. Apparently, during the time of the pharaohs and all those historic sites in Egypt, there was gold mine. There were gold mines around there, and Egyptians are trying to go there and take a look and see what they might be able to find. If there's still gold in those mines, you could take a look at that story if you go to the blog post and click on the link. Many people are predicting that if there is a Brexit, the gold will just go bonkers. And that's probably one of the reasons why most of the establishment press and politicians are very much against, and central banks and IMF are very much against a Brexit vote. There's a story here, if you're from the UK, that the Royal Mint had come up with a way to save your pension money by storing gold with them. And there's a story here that mentions the mechanics of trying to do that. Silver, interesting story. We like to cover the finds as they come up. This one was in Scotland. 100 silver pieces were found up in Roman era Scotland. You could click on there, you can see what those pictures look like and what those coins are. U.S. economic data on the 15th was so-so. The PPI was up a bit. Industrial production was not very good. It was down 0.4%. They expected it to be 0.2%. The Empire Fed, for the first time in a while, has gotten past the zero and negative numbers, and is at 6.01. Not much of a big deal there. Now, on the podcast of the week that I done with Rory Hall over at the Daily Coin, we talked about the decline in sales of Silver Eagles in June at the U.S. Mint, and we attribute that to there being a allocation or rationing of Silver Eagles for the first 5 months to the authorized purchasers at a very high level. So what happened was every week they were rationing 1 million Silver Eagles to the authorized purchasers, and they were buying them all. And now it seems they haven't sold them all. And we suspect that the reason that the U.S. Mint allocated such a ration, such a high number, was to avoid the appearance of shortage in the attendant news that might result in panic buying. In any event, I don't want to go into that too much here. If you check out the Silver and Gold update with Louis Camerasano over at the Daily Coins YouTube channel, or you can go to the Smaulgld YouTube channel, and I have it in a list of podcasts that I've done with the Daily Coin. Silver, some guy found a British 2p coin that somehow was struck in error, and it was worth about 1,350 pounds. You can check that out and see what that silver 2p looks like. Gold, HSBC says gold will explode if Brexit happens. So there's a lot of people thinking that gold's going to go off to the races if this Brexit happens, and that's why there's been a lot of campaigning against it from the establishment, and we're going to see what happens as we scroll down to about, I think it was the 16th. Fed rate hike decision. No surprise here. The Fed kept rates at 0.25% and saying this is going to help further strengthen the labor market. You can read the Fed statement here. It's the usual nonsense. The labor market, if you believe the numbers, is perfectly strong and able to stand on its own because they say that the unemployment rate is 4.7%. Fed said when rates got to 6.5%, they were going to raise rates. It's at 4.7%. So that either highlights that the labor market isn't good and that the 4.7 number is a farce, or they just don't want to raise rates. But in any event, Yellen did say, she had a press conference after Federal Reserve Chairman Janet Yellen, that it's not impossible that they could see a rate hike in July, which went from being very probable. And if you remember, we had the yak attack in May with about 8 or 9 Fed presidents all talking about 2, 3, 4 rate hikes in 2016. And then she comes out and says no rate hike in June, and it's not impossible that we'll do one in July. I've held all along they'll do one. That's it. I said that at the end of 2016. During 2015, at the end of 2015, during 2015, I said they would raise it once, and then after they raise it, they would talk and yak about maybe doing it, not doing it, and end up basically doing one. More gold stories. Now, after the Fed announced no interest rates, and they indicated that basically a lot of the Fed committee members were only in favor of doing one this year instead of two, which is down from the 4 that they, which was ridiculous. They said they were going to do 4 back in March, and now most of them are back down to about 1. Gold shot off, went up to about $1,300 right after the Fed minutes. The next day, gold continued to rise, June 16th. The initial claims on the job front, they weren't that good, but they're not that bad. They were 277,000 claims. They think anything under 300,000 is a good number. CPI and CPI core numbers, consumer price index, they were basically in line. They didn't indicate any, according to the official numbers, any ridiculous inflation or any slowdown, but they seem to be not acceptable to the Fed in terms of being robust enough. The Fed wants more inflation, so these really aren't heading towards their inflation target. Philly Fed was up a bit, not a big deal. There was a TIC report from the Treasury on the largest foreign holders of U.S. Treasury securities, and it showed that Treasury bond dumping is at the highest level since 1978. So that ties into the concept that one of the reasons the Fed may have to raise rates is just to kind of protect the dollar and the Treasury bond demand, because if it looks like the Fed is just bluffing and constantly talking rate hikes and not doing it, then confidence in the Fed stewardship and basically what they say is lost, because they've been talking and talking and talking about raising rates and they haven't raised them. We'll get to our friend St. Louis Fed President James Bullard, what he said later on in the week. Brexit fallout, bound to happen. Switzerland withdrew its EU application. A counselor, one of the guys in this, I don't know what they call it, the Swiss parliament, said only a few lunatics may want to join the EU now. So Switzerland is withdrawing its EU application. They'll present the withdrawal request right after the Brexit vote. There was a poll in the Netherlands from a major, I think it was De Telegraaf. They said that 88% of the people in the Netherlands want a referendum on staying in Europe. That doesn't mean they all want out, but the fact that they want to have a vote, it means they definitely want to discuss it. So you're seeing that it isn't just about British people wanting out of Europe. It's about people not wanting to come in as much as they used to, and some people, or some countries wanting to get out. Then the big news of this day on the 16th was a British pro-union member of parliament named Joe Cox was killed. And apparently the guy who killed her attacked her shouting Britain first, or Britain our nation. I don't know what he said, but supposedly it was something that was indicating that he was in favor of leaving the European Union. Now, Miss Cox was a campaigner in favor of being in the European Union. And so Britain suspended campaigning in the wake of the shooting to give time to pay respects. And, the vote is, and the polls were suspended until this week. And I think they came out with polls again today. And this was eerily similar to the circumstances of the killing of this pro-EU Swedish foreign minister named Anna Lund in 2003, days before the Swedish were going to vote whether they would join the EU. They did the same thing. They suspended campaigning, and when the campaigning continued, voila, Sweden decided to join the EU. So they're pointing out that perhaps this killing of this prime minister of this member of parliament will shift the sentiment against the Brexit people, because they were deemed perhaps responsible for her killing, and there's a sympathy for the Leave campaigners. They were attacked and so on. And the first polls came out today, and it shows that momentum has indeed now shifted to a stay vote rather than a leave vote. I don't know if a lot of people in England are aware that similar circumstances happened in Sweden just 13 years ago. I mentioned the Wealth Watchman covered this assassination, and it's worth I won't go through his points here, but you can take a look at the link on the website or just go to his website. Now, what was interesting was gold was rising the day after the Fed had decided they weren't going to raise rates and struck that dovish tone about further rate hikes during the year. So gold took off. It went from 1290, went to 1300, went all the way up to 1315. And then when news came out that Miss Cox had been murdered and that they were going to suspend the campaigning of the Brexit vote, and it looked like maybe they might delay the vote, and somehow Brexit wouldn't happen, the pound rose and gold got smashed and taken down. Got taken down from its high. If you look from 1350 all the way down to 1280, which is what 35 points, a big swing. Same thing happened to silver. It had been rising. It had been almost up to $18 at 1785. It got taken all the way down to 1715. And another find during the week, we saw amateur archaeologists stumble upon a large trove of Viking gold. It was in Denmark. You can click on there and you can see what they found in Denmark. Silver, there was a positive silver story. I think it was in Bloomberg. Silver assets climbed to record as forgotten metal soars. I guess they published that when the price was around here. They didn't see it head back down. But the next day, gold and silver did recover, not up to their highs but of the day before, but they did recover substantially. As you saw, gold almost breached 1300 and silver almost got to 1750 back again. More reports on U.S. Mint sales, 230,000, bringing them over to like 1.1 million in June, which again is less than half of the pace of the prior months. Gold is selling okay. Another 35,000 sold. They're about 378. Looks like they'll sell more gold this year than last year, but nothing like the manic years of 2010, 2011. Now, on Friday, Fed President James Bullard said the Fed may only need to do one rate hike. And he said, we need to raise rates or face devastating bubbles. Then he kind of laid down a shocker. He said not only does the U.S. probably only need one rate hike over the next 2.5 years, but the Federal Reserve, he's criticizing the Federal Reserve, is eroding its credibility by indicating otherwise. Basically saying all these guys going out there mouthing off about 2 and 3 rate hikes, 4 rate hikes in 2016 and not doing it are eroding the Fed's credibility. And I agree with him. He basically said, look, this economy's stuck like this. Like he knows what's going to happen. He said, this is as good as it's going to get. Now, if you remember last year, this is exactly what we said would happen. I have a little snippet here from the blog post we did in why the Fed raised rates immediately after they did was we knew they were just going to continue to push the narrative that they were on a rate hike path. They were data dependent. Economy's improving. There's job gains, strengthening, boost consumer spending and inflation. And then we said, having gained credibility for raising rates, Yellen and Fed officials will talk about another rate hike for months, which is exactly what they did, sending conflicting signals that they might raise rates, might not raise rates, might lower rates, and they even mentioned they might go negative interest rates. And so you see, this is the Fed's game, is just to talk, and hope people not only pay attention, but believe them. But Bullard is coming out right now, and he's trying to avoid egg on his face and saying, look, all this yakking, it doesn't do us any good if we don't do anything and we just keep crying wolf that we're going to raise rates. So that's why I believe the Fed will do a rate hike if they have to. If it gets to the point where people aren't believing them, the dollar is falling, Treasury bond demand is falling, they'll do a quarter-point rate hike. Okay, the markets collapse, they crash, whatever happens, derivatives blow up. The way I look at that is they either hit the truck, they're in a box, either hit the truck head on or they swerve and they take out the pedestrians. If they got a choice, they will mow down the pedestrians because they need to protect the dollar. They need to protect Treasury bond demand more than they need to protect the markets. The other example I give is they can either shoot themselves in the head or shoot themselves in the foot. And if they have the choice, they will shoot themselves in the foot, which means the markets get it. They are not going to sacrifice their credibility, the dollar and Treasury bond demand for the markets. It's not a good choice, but people are telling me they can never raise rates. No, actually they can't, but they can. Because if they don't raise rates and the whole ball game goes away because they don't have the dollar, they don't have the Treasury bond, they're always going to side on the Treasury bond, their own credibility, and the dollar. I think it's about it for the week. You just scroll through, check out some of the other links. But thank you again, everyone, for tuning in. And you can check out the blog posts and all of the other blog posts we do at Smaulgld.com. You can subscribe for free, and we'll send you all of the blog posts that we do as soon as they come off the press. And also, please subscribe to the Smaulgld YouTube channel. Thank you very much for listening, and we'll see you next week.